Hey guys, welcome back to another episode of the Web3 Big Bites. This is the podcast where we jump to the latest bits in the decentralized world and chat with some of the brilliant minds in the Web3 industry. I'm your host, Olabisi, and today I'm thrilled to be joined by Chris Soriano. Chris has been in trading for over 20 years. I mean, he spent 13 years in Asia building FX trading platforms and even worked on Bitcoin products at the world's biggest FX venue. How cool is that? And so that's where he saw the problems that made him start his own company. He co founded Bridgeport to fix a big issue. Trading firms have to park money at different exchanges before they can trade. His team builds a solution that lets traders keep their money in one place but trade everywhere. I mean, that's pretty cool stuff if you ask me. Chris isn't building the flashy Web3 things usually about. He's focused on the boring but important stuff that big institutions actually need to use crypto properly. So buckle up, guys, because we are about to uncover some insider secrets from the trading world, find out why traditional markets are actually broken, and discover what's really happening behind the scenes in institutional crypto. Trust me, it's way more interesting than you think. So, hi, Chris. Welcome to the show.
Thank you for having me, Olabisi, and really and thanks for that nice introduction. Although I have to say I think it may be slightly longer than 2 decades. So but I don't need to age myself.
All right. So great to have you on the show today. So before we get right into it, I mean, how did your journey begin in crypto? I mean, that's the first question I always ask my guests. I'm always curious. How did your journey in crypto started? How did you did you just wake up one day and say, okay, yeah, I think there might be a place for me here? Or how did it all start? Well, curious to know.
Yeah. So to be clear, I was my background, as you mentioned, was always in foreign exchange, and I started out as a trader, right? Where all those processes that we kind of went through back then in the early '90s, mid '90s, were very manual. Right? There were I had 15 different voice brokers screaming prices at me on all these different squawk boxes, and all the traders on the trading floor very had them as well. So all you would hear all day long is screaming prices, 50, 55 and 2023 and all these different things. So and as the market started to mature and electronify, I really got interested in building electronic platforms. And so I had an opportunity at a as the especially as the foreign exchange market started electronifying, I had an opportunity to start building those electronic exchanges for some of the largest companies, and what ended up becoming the largest FX wholesale venue in the world. And just quickly on what that means, the wholesale FX market is where banks and high frequency trading firms come to hedge risk. As far as, like, what my first foray into crypto, I wouldn't call myself, even though age-wise I'm an OG, I wouldn't call myself a crypto OG by any stretch. We it was really where my first kind of foray into crypto was in 2017 when we were at this very large electronic FX platform. And, most people may not recall, but in 2017, it was an interesting time for crypto. It was thought that the banks were imminently getting ready to trade crypto. And I would go out and speak to the largest banks in the world, JP Morgan, Goldman Sachs, Barclays, UBS, right? And and I was trying to talk to them about my business, and all they wanted to do is talk about crypto. Which so you knew something was happening, right? So oddly enough, right, what happened was is our CEO came to me and said, we want to put Bitcoin on our venue. And so that was the first kind of like taste of what that meant. So that's kind of where I first, yeah, that's where we first got introduced to crypto, and I saw firsthand what a lot of the gaps were.
Oh, that's cool. So how has the experience been so far?
So yeah, it's been, look, it's exactly, it's it's a market that's evolving, right? I think one of the big things that we've seen in crypto today is that the infrastructure was always built out of that internet generation, right? That native internet group, and that infrastructure was built around that. It wasn't built really for how institutions trade, right? Like, so somebody like myself, or most of maybe the people listening here, what do? We have an account on one of these exchanges. I do too. I have assets on Coinbase and I have assets on Kraken, right? I keep, but I'm just one person, right? So, and that's how this market and the infrastructure around this market was built. And that's fine for the retail side of things. But when it comes to the institutional side, institutions, and especially regulated institutions, they can't pre-fund on exchanges. They need to keep their assets secured with a custodian, a bank, but someplace where those assets can be held and locked in a vault, not on an exchange.
Wow, awesome. So thanks for sharing your journey and thanks for sharing your experience in the crypto space. So you spent 2 decades mastering traditional FX markets in Asia. What was the specific moment or realization that made you decide to leave that established world and dive into the relatively chaotic world of crypto infrastructure? So I know you've already given us a bit into your journey into the crypto space, but this is like more detailed answer.
Yeah, no, I think that you nailed it, right? So when I was mentioning just a moment ago that we were tasked with putting Bitcoin on this venue. And I think one thing that's important to know, to learn between the subtleties between, say, for example, traditional finance and crypto, is that traditional finance is built upon credit and trust and years of that, decades of that. So, for example, when JP Morgan does a trade with UBS, JP Morgan doesn't tell, or UBS doesn't tell JP Morgan, show me the money, right? They basically trust one another. They have legal agreements in place and they do a trade and then they settle, and they have reputational, like I said, legal, reputational, and just broadly, they trust one another to deliver the assets. Like I said to you before, crypto was, there's in crypto, you don't necessarily know who your counterparty is, what jurisdictions they're trading out of, and all sorts of things. So I think the big difference here is that I think, so let me just explain to you. So when we were tasked with putting Bitcoin on that exchange, we had to have verifiable proof that the counterparties could deliver the assets. So, in other words, you couldn't come on the exchange and sell 20 Bitcoin if you only had 8 in your account. So, in order for us to make sure that that could be verified, right, we had to connect into a custodian, to have that venue connected directly into a custodian and have the assets of those various trading counterparties locked up on the exchange, right? And so everybody sees, hey, we know we trade on this exchange. This counterparty can deliver because that venue is telling us the assets are locked up at this custodian, right? So that's and instead of, and like I said, was saying before, in FX, they don't need to do that. They just put in accounting balances on the exchange, and everybody trusts one another. So I think the big thing that we noticed in crypto, and that one of the big differences is that traditional finance is built on kind of assumes trust. And I think a little bit what we kind of found out a little bit is in crypto, it assumes fraud, right? It assumes that you can't deliver, yet you may not. So I think those are the big differences. And that's the gap that Bridgeport is closing, right? We are that layer that connects the various stakeholders in the ecosystem.
Awesome. So I have a follow-up question because you mentioned something about a custodian. So I want us to break this down for listeners who might not fully grasp this. So what exactly does a custodian do? And why is this role so critical that it's often called the plumbing of financial markets?
It's interesting. It's really not the plumbing of the financial markets. What it's at its simplest, it's a vault. It's a bank. It's a safekeeper of assets. That's what a custodian does. You keep your assets with the custodian. There, many of them are normally regulated. Like you can, there's names out there that you've heard: Anchorage, Zodia. These are just some up top of my head that I'm mentioning. But there's also bigger custodians, guys like Bank of New York, State Street Bank, ABN. So there are a number of and what their job is to hold and secure assets. Now, what they don't do very well is they do not allow for those assets to be moved easily, right? So if their job is not to move assets, their job is to hold assets and safeguard them. And that's really the job of custodian.
Oh, so you also mentioned something about institutional adoption. There is a lot of hype about institutional adoption in crypto, but based on your experience, your OG experience, what does institutional crypto trading actually look like behind the scenes? And how different is it from the retail crypto experience most people know?
Yeah, look, that's a really cool question. Like, so what is institutional crypto? It's funny, right? I would say institutional crypto behind the scenes, um, it's almost like it's got this very high end, uh, uh, it's got this look, this is the key. Buying and selling is really the easy part, okay? Um, what the complicated stuff is what happens after a trade is done. Right? And like I said to you before, in retail, it's pretty simple. I have an account I keep my money sitting on Coinbase, but, having a couple $1,000s is one thing on Coinbase. Having hundreds of millions is another, right? That's the institutional side, right? Maybe billions, is probably the right word. So, so I, so I keep my money there. And then if I do a trade, the exchange will just debit credit your account, right? So the trading part is really the easy part. It's what happens behind the scenes, right? So right now, what a lot of times happens is there's different ways to trade in institutional. You may trade on exchange. You may trade through with an OTC counterparty, so bilaterally. I know you, you know me, we do a trade together, right? But though again, those are kind of mostly the easier parts. It's what happens after. How do we settle? How do we reconcile that trade, right? So those are the things that are really the harder, more important parts. And right now, what's happening is you'll have billions and billions of dollars of trades, or at least billions of dollars of trades. Maybe I don't know the exact number, but I know it's a high number of trades being confirmed over chat systems like Telegram or Signal, and then updating spreadsheets manual. It's kind of like what's the word? It's kind of like a Ferrari body with a horse cart engine underneath. It kind of looks slick, but the back end may be a little bit more medieval than you would think. And again, that's some of that infrastructure that Bridgeport aims to kind of automate and make much more compliant and secure.
So, still on trading, for most people, right, they think trading is about price predictions and technical analysis. But from your institutional perspective, what does real professional trading actually look like? And how different is that reality from public perception?
Yeah, yeah, yes. Look, trading it's different different segments, right? I think that's really an important. There are different segments of traders, right? So, for example, you have high frequency trading firms. And what do they do, right? High frequency trading firms, they will they use technology and speed to they may do thousands of trades a day, um, but only make a little amount, right? They're connected to maybe hundreds of venues, right? And they are always kind of trying to be that top of book price or the first price in the market, right? Where you have to cross their bid offer spread, right? So in other words, they may so if a high frequency trading firm, they may be quoting a price for Bitcoin on an exchange, say it's whatever the price is, but say it's a few points wide. They're quoting that price because on another exchange, they know they can exit at a small profit. Right?
Mm.
So, and I think and then you have, like, the larger institutions, for example, for example, a bank or any other sort of larger kind of client-driven institution. These firms are a lot of times they're executing client orders, right? So they have clients that wanna big clients that may wanna buy or sell a certain asset. Their goal is to execute while mitigating like market impact or moving the markets big directions away from their clients' interest, right? And then you have hedge funds, you have asset managers. These kind of firms may do big ticket sizes, but they may only trade a couple times a day, right? But and they need to prove that they traded at the best price for their clients, right? Or for their fund or whatever it may be. So I think the important piece in what like you look at this with the public perception that, public perception is probably that it's, hey, these guys sitting behind big computers, but and to some extent it is, but it's also, it's also guys like it's the big difference is that if you're sitting at, for example, a big firm like a bank or a big trading institution, they have information that mom and dad or us, we don't know. We're sitting here looking at a screen and saying, you know what, I want to buy some Bitcoin or I want to sell some Bitcoin. Right. You do it. But they have orders from clients, right? So that information is valuable, right? If you know that 10 of the biggest firms in the world are buying Bitcoin today, you have a pretty good idea of which direction Bitcoin is going. It's going to be going higher, right? It's supply and demand. So I think that's I think the key is in for any kind of market or any kind of venue that wants to grow liquidity, it's having a diverse mix of these counterparties, not being overweighted in any one segment, right? Does that make sense to you, Olivia?
Yeah, it does. It makes perfect sense. And I have a follow-up question to this. So, capital inefficiency is a massive problem in crypto markets. My question now will be, can you paint the picture of how this manifests at the institutional level and why traditional finance solved this decades ago, why crypto hasn't?
Yeah. So I think when we talk about why let let's talk about the inefficiencies first, right? So just to paint a picture for you here, right? Let's say you live in a big city and there are 1,000 restaurants in that city, or let's make it easier. There's 100 restaurants in that city. And before you go and say you and your partner, you go out to a restaurant 3 or 4 times a week, and I'm saying this because yeah, I live in Manhattan and that's kind of like what my wife and I end up doing quite a bit. So we go out to these we go to but let's say before you went to that restaurant or of these restaurants, you had to have $5,000 $1,000 sitting at each one of them. Now, you may not go to all those 100, you may only go to 10 of them every day, but you still have to have the money sitting on all those other venues, those restaurants, just in case you want to go there. Now, you don't get any interest on that money. You can't use that money. and it's not easy to move that money from that restaurant to another restaurant that you may eat at very regularly, right? So so these are the in the again, the reason why it was built that way is because it really wasn't a retail focused audience, right? And like I said, for the retail people, for most of us, keeping our money on those exchanges is good enough, right? Some more sophisticated investors may have a wallet, right? And then they allocate assets from their wallet onto that exchange. So I think, you know, and I think that's really at the crux of what Bridgeport does, right? So and I haven't really explained. So what Bridgeport does is Bridgeport connects the custodians and and exchanges. And so we're not a firm that touches the assets. All we do is send messages from the custodians and the exchanges so that the exchanges know that that trading firm is good for it. And 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 that is really the important thing. So I'm a trading firm. I have hundreds and hundreds of millions of dollars sitting at my custodian. What I can do is I can allocate a balance on an exchange, but it's not a physical balance, right? It's an accounting entry. And then what we do is we send a message to the custodian to say, are those balances available to put on this exchange? They will send us again, this message is all via electronic, right? And they will send us a thing that says yes or no. Assuming they say yes, then we lock up the balance on the exchange. Now the exchange knows that their assets are available. Okay. So once they know that, but the assets are still secured at that exchange, at that custodian. So they haven't physically moved, that we've just put in. Now, once the trader say it does 100 trades that day, what we would do then is we would net up all the trades into who owes who what. And at the end of the day, we will ask the exchange and custodian, the exchange and the trading firm, do you agree to these amounts? Again, this is all electronic, and they say yes, then we will send a message to both the exchange and the custodian of the trading firm to go settle. Everybody agrees to the amounts. Now they can go settle, right? So and not only that, so there's two things that Bridgeport does really. It's that pre-order out credit allocation on the exchanges, and then there's that post-trade settlement facilitation and netting. So again, you do all these trades, we net them out. This is who owes what, go settle on the blockchain. All right. And that is really that orchestration role that we provide. But I was going to say to you is also that trading firm may see an opportunity at another venue, right? Or analogy before was another restaurant, right? So what they can do is deallocate those assets off the exchange. So what would happen is then we would send a message to the exchange saying, are there any obligations or other outstanding orders why this trading firm can't move assets off your exchange? No? Okay, then we'll send another message to the custodian and say you can unlock those balances and now they can be reallocated to a different exchange, right? And that happens in literally milliseconds, right? So that's the flexibility instead of saying, hey, I got my assets locked on these exchanges. I'm not earning any money on them. I can keep my assets with my custodian, earn yield, and keep them safe and move them quickly and freely around the ecosystem.
Wow. Well,
Was that a lot there?
it was quite detailed and it really did give an insight into what Bridgeport is and what you guys do about Bridgeport. What I was getting from your explanation is that Bridgeport sits in an interesting position, right? You are not Web3 in the DAO sense, right? But you are enabling the infrastructure that institutional adoption needs. How do you see your role in the broader crypto system evolution?
Yeah, look, I think we see our role as a, you know, as a utility for the institutional ecosystem. You're right in what you're saying before. It's not necessarily a glamorous kind of role. We're not the new hot token. We're not, we're not doing, we don't touch the assets, right? But what we're playing is that important kind of coordination and that orchestration layer for credit and sell, right? And that's something it happens in every market, every traditional finance market in the world. And I think the important thing is, Olabisi, is when these regulated firms come in to crypto, and they're starting to now, particularly, as you've seen, some of the administration in the US is starting to create clarity around crypto rules and what have you. um when they are by law, and it's not just for crypto, it's for traditional assets, they are not allowed to pre-fund on exchanges. So for that next wave of investment to come into the ecosystem, they need to have what Bridgeport does, and I haven't used the term, I should have, I'm sorry, is they need off exchange settlement, right? Where you're settling off the exchange, right? They need to keep their assets secured, and they need to be able to settle trades um off exchange. So that's, we see our role as a utility. I think we see it as a non-conflicting role as well.
Thanks for sharing that. And I'm sure my audience who are listening to this, they're probably hearing this for the first time, but the way you give a detailed answer, I'm sure they'll probably search in what is Bridgeport and they would like to learn more about what Bridgeport does. So on that, where can they learn more about what Bridgeport does and where can they read
Thank you.
that?
So obviously we have a LinkedIn page. You can go to Bridgeport LinkedIn page. We have a Twitter. You can also hit our website. It's actually www.bridgeportmq. That's for messageq.com. Right. And you can definitely learn more. And on there, if there's something that interests you, happy for you to reach out, and we'll definitely love to connect.
All right, so I'll be adding the links in the episode description for anyone who wants to check out what Bridgeport does. You can check out their LinkedIn, their X, and their website. My final question for you, because this has been an interesting conversation so far. Looking ahead, I mean, based on your experience watching traditional markets mature, what do you predict will be the next major infrastructure breakthrough that crypto needs to truly compete with traditional finance at the institutional level?
It's funny. This is like, I coming from a traditional finance background, um, like, I find the crypto ecosystem to be unnecessarily complex. And maybe that's just me because I'm still learning a lot about the various rails and trying to understand it. But personally, the technology isn't the issue. We don't need a faster chains, or another viral token. I think that the breakthrough is really gonna be the creation of a shared verifiable layer that helps with both credit and settlement. The breakthrough for crypto is going to be in credit and leverage, and how that's going to provide um institutions with the ability to trade more. And Bridgeport's role is simply going to be to make, is we don't have to worry about trust, right? Bridgeport is going to verify that the assets are who has them, they say people have what they say they have. So I think it's not going to just be it's gonna be a system that you don't just have to trust the other person, that it's gonna be table stakes to that verification is going to be there. And that's the infrastructure that I think is gonna be the next leap. It's not necessarily, speed, technology, tokens all over the place. Yeah, that's all well and good, but, I really think it's going to be that plumbing layer that sits in the middle, that coordinates and orchestrates the various workflows from the stakeholders.
Well, thank you so much, Chris, for that answer. Thank you so much. And it was so great to have you come on the Web3 Big Bite show today and hear you talk all about institutional adoption. I mean, I learned a lot from today's episode, and best believe I'll be doing my research after today to go learn more about what was discussed on the show today.
Thank you so much, Olabisi, for giving me some time today and speak to your audience. And yep, BridgeportMQ.com. Love to see you guys and meet you there. So thank you.
It's always a pleasure. And that wraps up today's episode of the Web3 Quick Bites podcast. We hope you enjoyed the discussion. If you have any feedback or questions, please reach out on social media at Web3 Quick Bites or send an email to web3quickbites@gmail.com. Thanks again to our guest, Chris, for joining us. And thank you, listeners, for tuning in. We're back next week with more exciting content. So be sure to subscribe and tune in.